Development finance is seen as a bridge to make growth levels of developing economies more inclusive. CNBC Africa's Kolapo spoke to Kolapo Joseph, General Manager for Finance Development at North-South Power, about the importance of development finance in Africa.
Well, it means a lot. For us, we're an African-focused organization. And because we have Pan-African inspirations, which is also what CNBC Africa has, for us, our interests are aligned, and that's making sure we change the story of Africa, whether it's been in the power sector, the communications side of it. So we always feel happy when there are conferences like this that provides a spotlight on infrastructure financing, especially in Africa, but also provides an avenue for investors and also operators like us or companies like us to jointly review the issues in the industry and see how we can jointly provide solutions to the African continent.
Now, Development Financing Summit, Development Finance Summit 2017, yes, the theme of the conference. How relevant would you say the theme is to financing infrastructure projects in Nigeria and, say, Africa generally?
I think it's very relevant. If you look at it, there's a consensus amongst a lot of the players across Africa that Africans need to find Africans-focused solutions. Now, when we say that, we don't mean you're bringing down the standards in terms of corporate governance. But what it means is that you're seeing that there's some challenges. And for example, I'll give you one. The exchange rate challenge faced by a lot of people when they want to raise finance. In terms of you invest at a certain exchange rate, what exchange rate will the investor get in 5-10 years? And how does that impact the IRR you want to give them? Or for us, in our sense, sometimes borrowing money at what amount of naira we will be using to repay that debt. So when you look at those things, you realize that it's only us coming together, finding solutions for it. And we have reached a situation, especially when you look at it in Nigeria. We have the precedent transactions like the LCC road, we have S concession road. We have the precedent transactions in power in which the government privatized the power sector. The next phase is how do we raise financing to drive capital expenditure for expand our current asset as we have or build new greenfield projects. And that's becoming very important because if you look at all of our investments in Africa, after oil and gas, and oil is already showing it's having challenges, the next big sector is the energy, is the power sector, electricity sector. And for us, we think it's apt to say that, look, let's have this conference, let's discuss what are the financing or bankable challenges and how can we together frame how we can address these issues. I'm happy that at this conference we had government representatives there, we had the private sector representatives, both from the operator and from the financing side of it. So that helped in looking at ideas, and I believe at the end we were able to think and I agree on certain views on how we should address it going forward.
Now, going closer into your industry now, as an operator within the power sector,
yes,
what challenges would you say you face with regards to development financing, and how are you navigating them?
So development financing is typically, the advantages long-term, cheaper. The disadvantages is that it takes a long time to conclude. It takes what they would require, it's sometimes quite difficult to meet it. And one of the things I alluded to is dealing with the foreign exchange issue, amongst other issues. For us, what we've decided to do to sort out this solution is to say, look, why don't we've reached a stage where as North-South Power, we have built a company, has strict corporate governance. We have shown a track record of significant operatorship. We increased capacity of the power plant for the first time in 26 years from average of 42, 43, 44% to 52%. That's the first that's ever been achieved in 26 years. So we've shown that. We've done major capex programs, so we've shown a track record. The next stage is, what's the next stage for us as a company? And for us is beyond how do we get the best of development finance institutions and also achieve the local and address their local issue challenges. And that's why we've gone ahead to pursue a bond in which we'll be getting credit enhancements from DFIs. So that means we've taken out the concern of the foreign exchange risk, but we've also made sure we tapped into the local capital markets to be able to do this. And one of the things that we've seen in our sector is that it's had its challenges, but it's gradually improved. So we've moved from a stage where we're getting about 30% payments to about 80% payments. But what, again, I always tell people, with the little you've given, what have you done? And for us, with the little we've given, we've shown tremendous track record and tremendous progress. And that's why we were able to say there's a turning in the tide in the power sector, and this is the right time to be able to drive this initiative.
Now, your company aims to raise funds to execute its projects without government financing. Talk us through the strategies that you are adopting and how you plan to raise funds for the projects mentioned.
Okay, so first, let me talk a little about the project. So we intend to, right now, we have a 600 megawatts capacity power plant. The way we've looked at it is we need finance to do two things. First, to de-risk the power plants. And when we say de-risk the power plants, we need to make sure there are no structural failures and things that we need to make sure the plant, and we want to spend money to do that, to make sure that the plant will be here for what my executive vice chairman will call eternity, in perpetuity, even when we are gone. It has to be there, and we're devoting money for that. The other thing we're devoting money for is to do the overhauls of our turbines. And it's not just a normal overhaul, we're doing the overhaul but to increase the rating of the turbines. So right now they can each do about 150 megawatts. We want to move from 150 to about 180, 185 megawatts. And the idea is that during the peak time, like now when the rains are there, instead of us doing 600 megawatts peak, we can do 720 or more megawatts. For us, so that's the way we are thinking of doing our capex. And the way we've looked at it is we want to take out the exchange rate risk. And so we're pursuing a bond, working with Infocredit and other issuing houses which were appointed. We are pursuing issuing a bond, and we're looking at issuing a bond of up to 15 years. And the idea is to get the bond. Infocredit will provide credit enhancements to deal with the fears of payments, but we feel that even with our 30% payments, we're able to do certain things like improve our power plant's capacity from 450 to 600 megawatts. We're able to meet all our obligations to our lenders and things like that. So we've shown that we know what to do. We are financially disciplined. Now we've moved from 30 to 80%. So essentially that risk is being sorted out. We're happy what the government has done with working with the World Bank with the Power Sector Recovery Program. We're very excited with what they're doing, and we've seen that they have met all the milestones they were meant to meet regarding delivering that power sector reform program. So that gives us a lot of credibility. World Bank and AFDB have committed funds to that program. So that gives us a lot of credibility that there's at least a roadmap, and there's a roadmap that is being worked on, that is being moved on to take the power sector to where it should be. So with that in mind, we're quite confident in issuing this bond, and we always tell ourselves we're the diamond in the rough. We're that diamond, and we're very very confident of when we meet the market, of being able to achieve this, because it's to change the narrative for the sector, it's to change the narrative for Nigeria, because we really need to get to that level in which we can get the money, the long-term Naira money to fund this kind of projects. And then that changes the narrative to, if you are a credible company with a good business model, you can raise long-term financing. And that's what the narrative should be.
That was Kolapo Joseph, General Manager for Corporate Finance at North South Power.